Hey traders, and welcome back to my channel. In this video, I'm going to share with you one skill that can drastically improve your trading performance. Now, I'm not talking about a strategy. This is a practice that you can repeat every day in the markets, and every day you practice this, you'll get better. I'm telling you, this will really improve your ability to read price charts. I'm talking about reading price action. In a moment, we're going to jump onto the chart. I'm going to share this simple practice with you step by step. But before we do that, you may have missed an announcement that I have recently launched Mindset Mastery for Traders. This is a program which focuses on transforming your mindset for trading, teaching you about trading psychology and, more importantly, how to manage those pesky emotions whilst you are trading. It includes a comprehensive series of modules as well as audio files with some guided meditations and affirmations. If you'd like to find out some more, there is a link below in the description. Alternatively, if you're not quite sure, have a go at Mind Over Markets. It's a free course that can give you an idea of just how important trading psychology really is. Please remember to like and subscribe to the channel, and let's get into the main content. Hey guys, here I am on TradingView charts. In this practice that I'm about to share with you in this video, you can pretty much apply this to any market. Stocks, crypto, commodities, Forex. Personally, I focus on day trading Forex, focusing on the major currency pairs. And this week I have traded a lot of USD Swiss franc. So I'm going to focus on USD Swiss for this video because I'm genuinely really curious to just see how it plays out. But if you trade other markets, you can definitely apply this skill to those markets. Practice it for yourself, practice on the charts, practice in the demo, and just see how much this helps your ability to read price action and make better decisions, technically speaking, for trading. So I'm going to load up USD Swiss. Okay, and what I'm going to do, I'm going to use this really handy back testing tool to go back in time, not looking at my charts. Look, eyes closed, don't know what I'm doing. Okay, let's go there. Just so that you know I've not rehearsed this video. This is all natural. Right, so we've gone back to November 2021. Gone back quite a while. And I'm going to switch to the 15-minute time frame, because that's the time frame I like to day trade. I like to use the 15-minute time frame for intraday trading, for planning my trades and executing my trades. But this skill, this practice that we're about to do, you can do this on any time frame. So if you're a swing trader, if you use mainly, let's say, the 4-hourly, or maybe you use the hourly, you can just use that time frame. It's very flexible. It's so simple. All we're going to do is be reading price action, focusing on market structure. And it's so easy. It's just looking at the peaks and the highs and the lows and identifying those and analyzing how that affects which direction we are trading. So this skill I'm going to share with you is really helpful if you sometimes find that you struggle figuring out whether you think that you need to be going for a long or a short. Is price going up or is it going down? If you're ever in any doubt, just remember to just carry out this practice, and it can really help to just center your attention and focus on what is right in front of you on the charts. So I'm going to go to a new day because at the moment we are in the middle of the night on a Wednesday evening. So let's move this on to the Thursday. I've gone a little bit too far there. We're in the middle of the London session, but that's okay. I mainly day trade the New York session, but for this we are just focusing on all the sessions. And what I'm going to do is reset this so that we've got 300 worth of bars. I'll zoom out enough here so that we get the idea of the flow of price. And quite simply, so I've gone back a couple of days. That's all you need to do, a couple of days worth of history here to say flitting back to the daily time frame. We can just zoom out. And what we're looking at, I'm going to go to that furthest day. So we are currently on the Thursday, Wednesday, Tuesday, Monday. So I've gone 3 days back. So this is the week. We're looking at the week, and the week started here, and from the open of this current week, price pushed up, it made a high, and it came down and it made a low. Now at the moment we've not broken either of those at this point in time. Price could carry on down or it could go up, but it pushes up and it closes above this high, making a new high, and it comes back down here, builds some support, and then it pushes up again, closing with this high. And that is when we see this trend emerging, because it's breaking highs, it's building support, and it's breaking highs, and more importantly, closing above them. The bodies are closing above those. So from this alone, we can see that this week price has started to trend higher. If you are going to want to get into this position, these are the structural points that you need to focus on. Rather than getting confused in the tiny detail, you need to remember the overall authority of highs and lows. So let's mark them out to make it simple. So we'll make this a high. So we've got our high and our low. Now when price breaks above this high, it confirms this as the low. When price builds this support here and breaks above this high here, it makes this little area the new higher low. And the reason I'm highlighting this is because the new higher low is the low that we can use as a gauge to see where price is likely to pull back to. What do I mean? Well, if you are looking for a long, the trend is up and you're thinking of going long, everybody has their own strategy. I don't know what your strategy is. You may rely on indicators such as the moving averages, or you may just focus on candlestick patterns like a double bottom, which is what we see here. We get a point, price turns, it comes back, we get another point here, and price goes up. So this is a double bottom pattern. You could get long there. Alternatively, myself, I like to use the Fibonacci retracement tool. So I would place this at the low of the previous higher low, and I would drop it at the top of the current high, which gives me these areas here of optimum trade entry. And you can see this is where price returns to make this double bottom pattern before pushing higher. But the foundation of this trade plan is from market structure. You need to understand how market structure moves first before you can consider setting any trades. So now I've demonstrated kind of how that works. Let's just carry on through together and get used to just repeating this practice. It's all about repetition. Price comes down. It doesn't break this low. That is very important that it doesn't break this. If it came down and closed below this low, violating this low, that could be an indication for a reversal, but it didn't do that. It came and it closed just above this low, and then it pushed higher. These little pullbacks here, the one we get here, the one we get here, are not really important because they are within this overall swing here. This is the important one, the high. Once we get a break above the high, we get one here, and price pulls back down here. We get another one up here, and price comes back down here. So we're getting this consolidation pattern. Then price consolidates, but it doesn't break this high until we come up here. So only just breaks it. And we get another pullback low here, level with this one, and then another push up. And as you can see, we're just kind of grinding higher. But it's understanding these most obvious peaks, the highs and the lows. Before I kind of continue this on, let's just make this obvious. The most recent high low we had was this point here, because from there price pushed up. We did get a little one there, but I tend to focus on the major ones, and then we get a big push up and a pullback there. Now price come down here and it made a low, violating these two. That could be an indication for a reversal. What it's doing now is it's testing these highs. If it can push above these highs and close above, we know that this is just a deeper pullback and we can continue looking for longs. But if it starts to struggle, as it looks like it may be doing here, and do something like this, this could be an indication for a reversal. So reading market structure in this way, it's not just about understanding how the markets move to help us to set trades, but it's also anticipating how the market may move once we're already in a trade. It's about anticipating if a market is about to reverse so that you can manage your position and maybe reduce those losers. So let's just see how it goes if we get a break above this level or a break below the low. And as you can see, it is doing what I just said it might do. It's starting to break down because we got this. The reason I knew it was going to do that is because it started to consolidate and struggle to push higher. It's grinding, and then the momentum came into the downside. And now this is quite a clear trend reversal. If you remember me saying, the key information here was the fact that we broke the two previous higher lows. These two lows here, once they got violated with this one right here, that was when I thought that it was a high chance of it being a reversal. Price pushes back up to try to retest these, to try to gain control to the long side, grinded, and then it dropped down lower. Now we've got this change in behavior. Price has shifted and we need to adjust to that because now it looks like we'll be looking for shorts. And all you do is clear your charts and you repeat this process. So this was the high, this was the low, this was the attempt to break this high that didn't work. And then price dropped below this level here. Now from this level, we kind of had a little pullback here. It wasn't very deep, but it was a little one, so we can mark that. But now that's basically all the information that we need. We're just waiting to see it build support. So let's play this on a bit. It's dropped with some strength. So we have this little pullback. We have a new low, a lower high, little consolidation here and here. And these are all points we could use to have basically gotten in on this for a short. And we're pushing back down again now. And the question is always going to be, is price going to break this previous structural point or continue downward? But whilst it is in the strong trend, by all means, you could have used the structural points to try to scalp some moves. Whether you are using a drawing tool like a Fibonacci, or whether you prefer to use another tool, you could use the Fibonacci extension tool. That's always been quite a favorite in the past of mine, where you use the length of a previous pullback to gauge an entry. Or of course, you could go with an old-fashioned indicator, like a moving average. This 20 moving average, you can see price comes and taps it perfectly and drops down. There is some advantages to moving averages, but personally I don't like to use them because I think they are purely a trend-based indicator. So like this now, where we have a strong trend, it comes in. But before that, when we were using price action, you can see that the moving average didn't really help much at all. And here I'm not planning any trades because the way that price has dropped down and we've had these very short pullbacks, I think it's waiting for a deeper pullback, which again could be a trend reversal or it could be just a deeper pullback. And the way that I gauge this, that was the low that got broke before. And I'd marked the most obvious points, so coming back down again now. This is what I would be looking at. So we had a lower high here and a lower high right here. Price may push above this one, but if it remains below this one, I would still look for shorts. You call them the major and the minor structures. So we got a little push above that one, but it looks like the bears are remaining in control. Let's extend that out so we can see how we go above there. Price pushes up, but it immediately comes down and it closes below all of this structure. So that could be the change in behavior if you're looking for shorts, to then get in short on a little retest up here of this consolidation. But from there, price just starts to drop off. And the most important part is when we get a close below this low, the current low, down here. And then we're grinding again. And it's just a really simple practice. This video isn't about demonstrating how to take a trade from start to finish, but it is demonstrating the power of reading market structure. This is the foundation of all of my trading decisions. And I strongly believe that if you incorporate a skill like this in your trading, I think it would really benefit you and help you to make more accurate decisions. But I treat this almost like playing an instrument. I think it's something that you need to practice, like your scales, frequently to develop it, to stay in tune with the markets, to keep your eyes trained, and it just helps you. It's like a warm-up. It's like if you're going to do a marathon, you do a warm-up. This is the warm-up I would do before trading. I talk more about this along with candlestick patterns and support and resistance and all of the technical goodies in my ebook, Forex Trading 101. It's a complete guide for beginners. So if you're watching this as a beginner, it may be of use to you. There's a link below in the description if you want to find out some more. I've just moved to gold now just to change things up a little bit. And I've gone back in time just a week to a new week in May, just so that we can do the same practice and see how this works on a different asset. All markets move differently, but generally speaking, when it comes to reading market structure, they tend to follow the same pattern. Once again, let's just go from the beginning of this week here, and let's just mark the most obvious lows and highs. Now from the open here, we pretty much have just been coming down. So we made a new low here, we pulled back and made a new lower high. Once we broke this one, we made a new low here and a new high, a new low and a new high and a new low. Now on the Thursday, we got a big push up. We broke these 2 points and we came up here. Now this is still underneath this lower high point here. So it could be a deeper pullback. We've pulled back down here. We didn't break this low. So price is consolidating. And when it does this pattern, I am usually very interested to see if it would break the structural low here, or of course if we then break the low and then we're looking for shorts to the downside. So once again, we're just watching price to see what it does, and then we can make a trading decision based on that movement. There we go. We got a strong push above on the Tuesday of the following week. And this would be a nice indication of the reversal because we are seeing it break these authority points, these peaks in the market. The first indication was when it broke these two here. More aggressive traders could have decided to go long down here when we didn't break this low. Or of course here, as we're consolidating, there are different patterns that you can see, but we could talk more about candlestick patterns in another video. Let me know in the description. Let me know below if you're interested in that. Once we got the break above this level here, I would just kind of look back a bit and just identify once again what we were seeing. So we're having this consolidation. The main push came after this one here. We got a little pullback there and then the push up. So price should generally, if it's going to pull back, come down to this sort of area and then come back up again, or it'll just grind higher and just push up. And we just follow it. Reading market structure once again. Marking the most obvious highs and lows. Another high up here, another low. It's not breaking these previous ones. This is just really nice market structure. And these are all points, if you make the candlesticks bigger, based on the time of day that you like to trade. So I like to trade the New York session. These pullbacks here are nice areas where you could get in for longs. So when price came back down here, let's look at the New York session for gold at this point here. It's not a lot of time, but there's an opportunity to trade in there because from doing this simple practice of reading market structure, we know that this was a high, we know that this was a low. Price dropped in nicely to this area here. So as long as this didn't get violated, this would be a nice place for a long. And as the New York session opened, at this point here, we got this bullish pin bar up, pushed up, we came down, couldn't break this and got another bullish candlestick up. This would be a nice place to go for long. You could get in up here or you could try to get a 50% retracement. I don't think it would quite reach. But I'm just kind of demonstrating how reading price action in this way can just open you up to these trading opportunities. Reading market structure, it's not just about understanding whether you want to go long or short, helping you to plan a trade, but also helping you to set things like stop loss. So if I was to get into a trade here, that's not the best entry. It's quite high up, but still the stop would have to be below this structural point here. And then there's a high probability that it's going to win. Maybe even have a trading target. If you want me to try out this practice on a specific asset, do let me know below in the comments, because I always love carrying this out and sharing it with you, and it's great to trade different markets. If you've enjoyed this video, please remember to let me know by hitting that like button. Don't forget to subscribe if you're not already part of the channel, and I'll catch you in my next video. Thanks for watching. Bye.